Can you expand on, I like the market here, I'm trying to learn? Well, don't learn from me, but the reason that, and there it goes. The reason that I like the market here is a couple things. Number one, we got data coming out, right? PCE data came out, and while inflation is high and continuing to go up, it is in line with expectations, and core PCE actually came in regular or flat. Now, keep in mind that there's another component to this. Personal income was up and personal spending was up. People are making more money. People are still spending. Now, that money that's being spent is actually top heavy. Okay, so I'll just give you, okay, so here's the thing. My brain is my brain, okay? Do not ever do things with my brain, right? Like, you wouldn't want to be in my, locked in my, there it is. It locked in right there at the same level. You wouldn't want to be in my brain, but I'll just give you an insight of the why I think something like that. Okay, so here you go. So I'm going to give you just a visualization of what I'm talking about, because you're usually an asshole and you're actually asking a nice question. So I want to like when I do with my children, not to be mean, but like I want to reward good behavior kind of thing. Here's what I look at. So in this case, you got to go back in time to other things we've talked about. You go back in time. All right. Number one, market is booming, right? Why is the market booming? A lot of different reasons. One of them is retail, right? Retail investors have, we are the captain now, right? Retail investors have changed the game. $5 billion a day flowing into the market. And most of this is from people just dollar cost averaging in 401ks and IRAs. As we said, 62% of people are in the US are now in stocks. This is up from 45% pre-COVID. So that is a lot of money. So when there used to be capitulation, it was because firms had all the control. They would start moving positions around. It would cause other things to happen. They would be looking now that whenever time there's a dip, this money DCAing in and retail traders buying, and like us, we sell the rips, buy the dips, sell the rips. We got cash on the sidelines. So there's always a dip to buy, okay? So big money is going to look at that and say, okay, what is a catalyst that could get us to re-enter or make others get into it, at least in my opinion, right? Well, 3-day sell-off in a market that is just continues to go up, right? 3-day sell-off. And a lot of that was a lot of the spec stocks that were like, quantum computing and AI, and a lot of the ones that have run, right? A lot of the ones that have run, the Russell as well, the spec and growth and momentum stocks. So a lot of that is retail side, right? So that's the trader side, not the investor side. So there's a lot of mix up there. Give 3 days of sell-off. It's Friday. Friday, we're going to call it today. We're going to call it buy day. Okay. And the reason that it feels that way is that you take the fact that we've had 3 red days, you look at these dips, and then you say, okay, what is the catalyst now? So you go to the economic data that came out today. Wages up, spending up. Now, here's the problem with spending. Personal spending is continuing to go up, but it's getting skewed. 60% of spending is for the top 40% of people. Okay. Or 40% of earners. So while spending is people that are the bottom 60% are still spending, it's skewed higher to these people, but these people's wages are going up as well. Wages are going up, spending is going up. That's good. PCE, which is the Fed's gauge for inflation, came in higher than last report, but met expectations. And now you hear that thing all the time of priced in. Right? Priced in is an overused word, but priced in basically means this is what you're expecting. You're trading or you're investing based on what you would think is going to happen. And when it comes in what you think is going to happen, it's kind of like, okay, that's what we have. We already expect that. So we sold off on that expectation or we bought up on that expectation. It's kind of like how we trade rocket stocks. Okay, you've got that. PCE comes in kind of, whatever. Employment data came in previously saying that we did see a better month, okay, of jobless claims and whatnot. Now we know that the Fed is basically their hands are tied because they've got to lower rates, and it's because of the job market. And even Powell, right? The other day, Wednesday, I told everybody in the morning, I said, this Powell talk is very important. And a couple of people were like, what the fuck are you talking about? They're just talking about fucking college kids and shit. I'm like, it doesn't matter. Everyone is leaning on every word Powell says, and he said a couple things, including the fact that there's no risk-free direction right now. We're gonna have to do something, and there's no risk-free. There's no good choice right now. But we're gonna have to go with the lesser of two evils and attack and lower rates to try to shore up the labor market, and then we can always return to inflation later. Meaning, we're in an inflationary environment. We're gonna have to cut rates, and we're pretty much expecting that inflation is gonna jump up. Okay, but that means there's more money out there. The economy's not the market. The market's not the economy. Take all that into effect, right? Going into a weekend, 3-day sell-off. Money still flowing in, decent numbers about inflation, okay? A little bit less than, better than expected in some case. I mean, core PCE was actually down year over year on the new report, or month over month on the new report. Take that, then wages and spending are up. You give yourself that green light. All right, we're still going. Take all that into account, and then I say something like, I feel good. I feel good about the market today. I feel good. So there's more to it, but that gives you an idea of what went into my before I said the words, good feeling about the market today. Like I said in the morning call this morning, I wouldn't be surprised if we ended decently green today just because of all this data, all this other stuff. Now remember, this is just me. I'm one idiot with a camera, but that including the rest of the past 4 years, 5 years, the fact that the other one is that we quietly, nobody talked about this. The last thing, quietly, yesterday, there's a report that China told their U.S. Business branches, their companies, their U.S. to open back up for business, like just stop with the restrictions and the whatever. Like good. That's a hint that the China U.S. China trade talks or whatever are getting somewhere. So combine all of that. Everyone's looking for a reason to buy the dip, and this is a lot of things. So yeah. So when I say something like that, it sounds. And there goes the S&P. It sounds like I'm saying it nonchalantly, but I do this for content and entertainment, and I have to keep people involved, so I can't do my little, spend all day doing my fucking Rain Man bullshit, because nobody wants to hear that all day. I don't say these things so lightly. Like, I do have a reason for why I say it. Now, that doesn't mean that something can't change. Don't get me wrong. I mean, literally at any moment, something could happen and change all of that. But that's kind of like how it goes into my thought process.